morning, Mark Soderberg with ADM Investor Services with your morning egg market outlook for Wednesday, March the 5th. Back after spending a couple days down in Denver for the annual Commodity Classic. Always a good opportunity for us to catch up with our colleagues at ADM while also connecting with several different farm operations across our nation's midsection. And true to Commodity Classic history, during the event, prices were lower this year. It just happens to be tariffs and I'd argue good crop progress in Brazil as the primary reasons for the price sell-off. Since peaking in mid to late February, corn prices are now down roughly 75 cents from high to low, a buck in beans and 90 cents to a buck in both Chicago and Kansas City wheat. So we've likely seen a major shift in ownership across the ag space after yesterday's trade. We're thinking that money manager long position in corn is now down to about 260,000 contracts. That's down 105,000 from the recent peak. And oddly enough, according to CFTC data, the largest amount of corn sold during a given week by money managers was 147,000 contracts, and that was 2 years ago, also during Commodity Classic week. We've seen a nice little bounce here overnight. Corn right now is up 5 to 7 cents. Beans, wheat, both 5 to 7 better in the beans, 10 to 12 better in the wheat, and soy products are also higher. I think likely the overnight strength built on comments from U.S. Commerce Secretary Lutnick late yesterday, who suggested that the Trump administration had been working all day with Canadian and Mexican officials to resolve the issues that have driven the 25% tariff. Even suggesting that Trump may be willing to meet them somewhere halfway in between. An announcement could come as early as some point today. So headline-to-headline trading continues. Weather-wise, a major winter storm just continues to impact the Midwest. Heavy rains across the central portion of the Midwest with a mix of rain and snow across the west and northwest regions. High winds will impact the entire Midwest as the system works its way through over the next 36 to 48 hours. In South America, drier pattern through much of Brazil, helping to push bean harvest. However, follow-up rains will be needed to help the developing second corn crop. In Argentina, another 3, 4, maybe 5 days of rains across the central and southern growing regions there before a much-needed break from the recent heavy rains. Hot, dry continues across the north. We do get ethanol production later this morning, export sales tomorrow, and USDA WASI report next Tuesday. The 100-day moving average will now prove to be resistance for the May corn contract, that at 463. If we do see some sort of an announcement sometime this week, hopefully, on that lift or reduce the tariffs with Mexico, I sense that this low yesterday, just under 445, could prove to be at least an intermediate low and look for a nice bounce from there. I do think next week's WASI report will show U.S. corn stocks dropping to, if not closer to, if not below 1.5 billion bushels on higher demand. May beans, for now at least, have rejected trade below that $10 level, and of course will continue to be sensitive to any trade or tariff news with China. Seasonally, however, would not expect to see much of any sales anytime soon, given the fresh supplies from Brazil. And then wheat, nice little bounce here. Still inside trade after new contract lows were made yesterday, but certainly would benefit from our U.S. winter wheat crop, would benefit from this rain across the U.S. midsection. Thank you for listening, everyone, and I hope you have a great day.